All right. So we are starting something a little bit different here. This is going to be a new segment on the Startup Vagabond channel. I'd like to call it for now the weekly update. We will see if that name sticks. We will see what it changes into. If you have a better name suggestion for this series, please let me know in the comments and I will happily change it and give you the credit for it. What this is going to be is every week I'm going to try Monday, Tuesdays to put out a weekly update of here's what happened over the last week and the weekend when it comes to everything in the startup world, specifically because it's the Startup Vagabond, focusing on Asia, Latin America, and Europe. Here's what happened, as well as Africa, Middle East. There's so many different regions in the world, but we're going to focus everywhere outside the U.S. unless there's big news. Such as Andreessen Horowitz, new round. I believe they raised a $15 billion round, fund, overall fund, but it's split into multiple funds. It's complicated. This is just a quick, easy way. Once a week, you can put this on in the car when you're driving to work. You can put this on when you're at the gym, and you can find out what's happened all over the world and the rest of the world over the last 7 days. Everywhere, what's happening in the VC world, and local governments, and startups raising, and startups exiting, new inventions, all this stuff. So this is supposed to be an easy way for you to keep up to date with everything that's happened. It'll probably not be as formal or professional as a typical news broadcast session, but we're going to go from there. We're going to figure it out. And who knows, maybe I'll become really good at this after maybe a few years of doing this. So starting off, weekly update number 1. This is going to be June, what would that be? 1st through 7th. We're going to do Monday to Sunday. June 1st through 7th, here is your weekly update and all the news that's happened around the world, or most of it, are the biggest news. So starting off in Asia, first we have a tech merger, the birth of South Korea's $850 million AI hardware titan, and a massive consolidation move backed by South Korea's Ministry of Science and ICT. Top-tier AI chip rivals Rebellious and Furiosa AI are merging into a single entity valued at over $850 million. The unified giant will merge its NPU manufacturing pipelines to aggressively challenge Silicon Valley's silicon monopolies within East Asia data networks. This marks South Korea's largest tech consolidation this year, signaling a protective regional pivot towards backing unified national champions over fragmented local competition. Thailand's Amity secures massive $100 million Series D round. Controversial software provider Amity has locked in a blockbuster $100 million Series D round, marking the largest generative AI software deal in Southeast Asia outside of raw hardware infrastructure. Capital will immediately fund R&D into autonomous agentic AI workflows that can execute complex corporate tasks inside legacy enterprise systems with minimal human intervention. As corporate buyers demand actual productivity gains over simple chat interfaces, this massive raise validates localized non-US B2B software architectures instead of Amity's planned public market debut. ZutaCore bags $100 million from industrial giants. Direct-to-chip liquid cooling pioneer ZutaCore has finalized a $100 million Series D funding round led by heavyweights Mitsubishi Electric and Samsung Ventures. The capital will scale ZutaCore's waterless, two-phase dielectric cooling infrastructure to handle the massive thermal and energy demands of next-gen AI data centers. With advanced AI computing pushing regional energy grids to a breaking point, international corporate capital is aggressively pivoting to the physical picks and shovels necessary to keep data centers running. Preferred Networks debuts next-gen MN Core 2 chip. Tokyo-based AI Preferred Networks has unveiled its custom deep learning processor, the MN2 Core, designed to slash data center power consumption by 40%. Bypassing traditional venture capital, PFN secured strategic corporate backing from Toyota and ENEOS to immediately deploy the hardware across Japan's industrial and robotics ecosystems. This milestone highlights a rising trend of Japanese deep tech pioneers outmaneuvering Silicon Valley's supply chain monopoly by building entirely localized networks. Angelini Ventures logs first exit with $340 million ResMed deal. Rome-based corporate venture firm Angelini Ventures has logged a major portfolio win as a global sleep health leader. ResMed finalized its acquisition of Noctrix Health for $340 million. Noctrix Health, which develops autonomous neuromodulation wearables to treat chronic sleep conditions, achieved the nine-figure exit nearly a year ahead of its initial venture schedule. While Angelini is European, the exit validates a booming global corporate M&A appetite for hardware-enabled, clinically backed tech over standard digital SaaS. Some more government-focused stories. Doosan finalizes massive $3.7 billion buyout of SK Siltron. South Korea conglomerate Doosan Group is completing a 100% buyout of wafer manufacturer SK Siltron for a staggering 5.5 trillion won, which for my American audience is about $3.7 billion. The massive consolidation redraws corporate lines, giving Doosan critical leverage over East Asia's upstreaming semiconductor hardware supply chains. Traditional Asian conglomerates are aggressively deploying heavy capital to secure sovereign semiconductor independence amidst global geopolitical turbulence. South Korea launches the K-Startup Grand Challenge 2026. South Korea's Ministry of SMEs and Startups has opened applications for its flagship KSGC 2026 program, offering 950 million won, or about 700,000 USD, in non-dilutive commercialized grants. The initiative provides foreign-founded deep tech startup, AI, and robotic startups with equity-free capital, fast-track visas, and direct proof-of-concept pipelines across over 20 Korean conglomerates. Policymakers are officially rebranding South Korea as Asia's primary soft landing infrastructure and industry AI testbed to de-risk frontier hardware before teams pitch to global allocators. Singapore, Japan, and South Korea launch a cyber alliance. South Korea Cybersecurity Agency, Singapore's Cybersecurity Agency, has activated mutual recognition and labeling partnerships with Japan's METI and South Korea's KISA. This unified cross-border alliance allows IoT and deep tech hardware startups to achieve a single streamlined compliance certification for all three powerhouse Asian economies. By dramatically reducing duplicative testing and baseline friction, this regulatory alignment serves as a massive growth catalyst for hardware and enterprise security founders scaling across Asia. Really cool stuff for cybersecurity. Japanese deep tech showcases frontier systems to NATO. 14 cutting-edge Japanese companies, including space tech, satellite data, and AI startups, alongside legacy giant Mitsubishi Heavy Industries, represented their tech at a historic NATO defense reception in Brussels. Hosted by Japan's independent mission, the summit highlighted a structural pivot to establish Japan as a vital, highly reliable technological ally for Euro-Atlantic networks. Dual-use deep tech startups are increasingly using sovereign alliances to bypass traditional consumer routes and scale directly via international government defense pipelines. Beyond Expo closes in Macau as physical AI epicenter. Beyond Expo tech gathering concluded in Macau, welcoming nearly 30,000 global participants and 800 international exhibitors under the theme AI Digital to Physical. The summit featured dedicated bilateral forums explicitly connecting startup ecosystems across Asia, Europe, and Latin America with manufacturing pipelines in the Greater Bay Area. The event solidifies Asia's evolving status, shifting away from simple mass manufacturing toward becoming the global premier global testing ground for embodied intelligence and industrial AI. more VC focused. Singapore cracks top 10 startup ecosystems to hit historic peak. According to Startup Blink's Global Startup Ecosystem Index in 2026, Singapore has officially broken into the global top 10 startup hubs for the first time in history. Despite a broader regional funding cooldown, Singapore's highly resilient infrastructure, state-backed AI frameworks, and business-friendly legal environments propelled it up the ranks. The milestone solidifies the city-state's dominance as the primary financial command center and launchpad for cross-border software scaling throughout the entire APAC corridor. CX Ventures is preparing a over $100 million Fund 3. The venture capital firm CX Ventures is launching its third and largest vehicle yet, targeting a corpus of over $100 million. The fund will back high-growth deep tech, healthcare, and Web3 startups looking to leverage Singapore and Thailand as launchpads for broader Southeast Asian expansion. By focusing on broader cross-border expansion, CX aims to capture lucrative valuation arbitrage between mature tech ecosystems and rapidly developing markets. Japan Post Bank's private equity program hits a record $53.5 billion. Japan Post Bank's private equity and venture capital program has swelled to 8.5 trillion yen, or about 53.5 billion, clocking a record 315 billion yen in net realized gains for the fiscal year. Fueled by domestic regulatory adjustments and a hunt for yield, this unprecedented influx of domestic LP liquidity is flowing directly into private markets. This massive capital wave provides a vital buffer for Japanese growth state managers looking to scale local portfolio companies in an otherwise highly selective global market. Echelon Singapore 2026 tackles the Series B crunch. At Echelon Singapore 2026, the primary focus is shifted to surviving the region's intense Series B valley of death as growth capital hoards at the ultra-late stage. While total regional funding stabilizes at $6.79 billion, a harsh capital concentration occurred, leaving seed stage founding down 50%, while late-stage growth rounds captured the vast majority of capital. Industry panels are actively urging second-generation founders to pivot from growth at all costs to 24-month runways anchored by non-dilutive sovereign grants like Singapore's $1.2 million Singapore dollars AI Accelerate scheme. South Korea VC shifts to a barbell model. A newly published market audit reveals that private pension funds and corporate backers now drive 80% of total fund formations in South Korea, but capital distribution has turned into a strict barbell model. Liquidity is heavily hoarding into early seed stage programs and ultra-late pre-IPO expansions, leaving mid-stage Series A and B founders facing a severe funding squeeze. Compounding the crunch for diversified tech, artificial intelligence has completely dominated the ecosystem, inflating to command a staggering 65% of all venture capital deployed into the country. BCG reports APAC fintech revenues surged 25%. According to a new global fintech report by Boston Consulting Group, the Asia-Pacific region has outpaced all international markets with a 25% year-over-year revenue expansion. This rapid growth has driven primarily by neo-banking platforms, tokenization, and digital banking penetration scaling across Asia, specifically Japan, South Korea, and Southeast Asia. Fintech has officially expanded to account for roughly 4% of all global banking and insurance revenues, fueled heavily by regional consumer adoption of borderless payment rails. AXS and NTT Data partner for Pan-Asia FinTech push. Singapore's dominant payment solutions provider AXS has signed a strategic MOU with tech and AI heavyweight NTT Data Japan to architect a secure, unified, cross-border bill payment network. The Digital Infrastructure Initiative is designed to seamlessly bridge regional payment rails, allowing consumers and businesses to execute multi-market financial transactions with minimal friction. This corporate-backed venture is positioned to capture massive transaction volumes, setting a clear modernization benchmark for fintech platforms operating throughout the APAC corridor. And our final story from Asia this week, Singapore's Horizon Quantum Computing secures $120 million. Quantum software startup Horizon Quantum Computing has officially closed a $120 million Series B funding round, heavily backed by SG Innovates and Temasek. The capital injection will be used to deploy the company's automated quantum software development platform globally, allowing traditional developers to write quantum-ready code. This stands as one of the largest non-hardware quantum allocations in Southeast Asia, cementing Singapore's status as a top-tier global tech nexus as sovereign funds pour nine-figure sums into quantum long before commercial utility hits the mainstream. All right, on to Europe. Sector grabs staggering 51% of all European VC capital. Venture capital activity across Europe hit $17.6 billion in Q1, marking the second consecutive quarter of aggregate growth for the region. However, Crunchbase data reveals an unprecedented concentration. AI infrastructure, autonomous systems, and frontier labs capturing a staggering $9.2 billion, over half of all European VC funding. While late-stage capital development nearly doubled year over year, total deal volumes plummeted by 40%, signaling a severe funding squeeze for non-AI SaaS and early-stage founders. The service pivots. 3Pillar appoints Andres Angelani as CEO and launches Helix AI. Software engineering firm 3Pillar has named tech veteran Andres Angelani as CEO alongside the official rollout of its new Helix AI platform. The newly deployed model-agnostic architecture equips mid-market and large enterprises with agentic tools, infrastructure, and governance layers required to instantly build AI-native products. This strategic shift signals a major industry pivot where tech services and consulting giants are deploying proprietary product frameworks to swallow up enterprise AI workloads, while traditional SaaS startups can capture them. In Europe's Megafund era, EIF deploys €15 billion fund of funds to fix exit drought. To combat the chronic tech talent and capital drain to Silicon Valley, the European Investment Fund, or EIF, is aggressively deploying a €15 billion growth stage fund of funds vehicle. A mouthful. The massive policy-driven initiative is designed to invest in roughly 100 localized growth funds, enabling significantly larger check sizes of up to $200 million per tech startup. By initially targeting Europe's structural late-stage funding gap, the program aims to give mature AI, quantum, and defense tech the liquidity needed to stay and exit on European soil. EU Commission rewrites merger rules to shield innovation. The European Commission has introduced a drastic overhaul of its merger review guidelines, consolidating 2 decades of antitrust frameworks into a single document. The updated policy introduces a proactive innovation shield that formally allows deal teams to defend cross-border mergers if the transaction enables R&D, green tech transitions, or supply chain resilience. This regulatory pivot represents a major structural effort to help European deep tech defense and climate scale-ups consolidate and achieve the industrial muscle needed to compete globally against American and Chinese conglomerates. Now more on the VC side for Europe. Berlin's Merantix Global Capital closes a €103 million early-stage AI fund. Berlin-based venture capital firm Merantix Capital has hit the final close of its latest specialized vehicle at 103 million euros. The fund is strictly earmarked to incubate and back early-stage, enterprise-grade generative AI and machine learning startups across Europe's tightening venture ecosystem. By focusing heavily on transforming deep research into commercialized B2B applications, Merantix aims to anchor high-potential European technical talent before they migrate to Western ecosystems. Globally, and OQC secure mega deals for sovereign tech. European quantum pioneers, Globally from France, and Oxford Quantum Circuits, or OQC, from the UK, have finalized a series of massive institutional capital injections. These multi-million Euro mega deals highlights a fierce regional push to establish sovereign quantum supremacy, prioritizing scalable spin qubit and hardware co-location architectures. The influx of top European LP capital signals that institutional allocators are aggressively backing infrastructure plays that promise heavy defense, shields against global geopolitical and data disruptions. And our final story for Europe this week, Mistral AI finalizes a 450 million euro corporate secondary sale. Paris-based AI champion Mistral AI has finalized a 450 million euro, or for my American audience, $490 million secondary share sale, allowing early institutional backers to exit. The structured transaction explicitly prioritizes European sovereign funds and localizes telecom giants to ensure the company's core infrastructure remains anchored under strict EU data privacy and compliance. The secondary market play provides a vital blueprint for how high-flying European scale-ups can deliver massive investor returns without relying on a selective US IPO market. Now on to Latin America. Unicorn flights. Mexico overtakes Brazil in Q1 VC inflows via Kavak mega round. In a historic shift for Latin American private markets, Mexico has officially outperformed Brazil in total quarterly venture capital inflows, pulling a $440 million compared to Brazil's $240 million. The regional shakeup was heavily driven by a massive $300 million Series F mega round from Mexico City-based online used car marketplace Kavak, led by Andreessen Horowitz. While early-stage deal volumes across Latin America remain lean, international growth stage firms are demonstrating an aggressive flight to quality, concentrating $761 million into late-stage infrastructure and fintech plays. Lean and resilient. Mexico dominates Latin American volumes via pre-seed AI surge. While Mexico top-line numbers were buoyed by Kavak, regional allocators like Kazakh and Monash emphasizes the real momentum is occurring at the pre-seed stage. Hyperlean AI-native founding teams are achieving immediate product-market signal on a fraction of historical cost, successfully insulating local founders from broader global growth equity droughts. This shift to highly optimized capital stacks highlights how AI-native tools allow lean Latin American startups to achieve product-market fit without massive early-stage dilution. In alternative funding, Mexico's KLAR, secures $100 million debt facility for expansion. Mexico City headquartered digital banking platform KLAR has locked in a massive $100 million debt facility for prominent European credit allocators. From them, the massive capital pool will be deployed immediately to scale automated AI-driven credit underwriting for underbanked SMBs across Mexico and Colombia. As international growth equity remains highly selective across Latin America, local fintech leaders are optimizing their capital stacks through alternative debt structures rather than traditional equity rounds. All right, final section for today. We're doing a little cross-border / global startups. So in geopolitical capital, Australia's Sovereign Impact Fund backs Vietnam's Do Ventures. The Australian government flagship impact investment fund, Australian Development Investments, has committed $10 million to Vietnamese VC firm Do Ventures' second vehicle. The strategic partnership highlights a rising wave of international geopolitical capital flowing into frontier Southeast Asian markets via established local managers. The fund will explicitly prioritize early-stage B2B educational tech and digital transformation startups operating across Vietnam and its regional neighbors, forcing founders to align commercial metrics with geopolitical goals. Hardware assets versus software. Galantis Gold finalizes a $100 million placement for Chile infrastructure. Galantis Gold Corporation has completed a heavily corrected $100 million private placement backed by international institutional allocators and family offices. The massive capital pool will be deployed immediately to finalize the strategic acquisition and deep tech development of the Araucolo and Indiana gold and copper projects in Chile. This 9-figure infrastructure injection underscores the extreme premium global private markets are currently placing on raw materials and localized physical assets outside the U.S. And for our final story this week, the global equity squeeze. LP Megafunds absorbs 73% of new capital. The latest institutional venture metrics reveal a stark structural shift. A staggering 73.1% of all newly committed venture capital has been swallowed up by just 5 global megafunds. The trigger has caused an unprecedented funding squeeze for emerging managers and early-stage startups across Europe, Latin America, and Asia. In response to this equity concentration, international growth stage founders are aggressively rewriting their playbooks, pivoting away from traditional equity rounds to leverage private credit and high-volume structured debt facilities to sustain global scaling. For a deeper look, check out the data behind these changing private market demands and the analysis VC is dead, 4 companies took all the money. That's it. All right. Those are your stories for this week, the 1st through the 7th. I hope you enjoyed this, learned something from it, connect with those people. I'll make sure to tag them on LinkedIn whenever I post this, and be on the lookout for next week's episode to let you know everything that's happening over this week and the weekend. So until next time, if you have any suggestions or other stories, or you have a better Hawaiian shirt for me to wear during these, please let me know. Happy to hear it. All right, talk to you soon. Until next time, bye.